simply, it's the same advice that everybody comes into the space. Just buy Bitcoin. And dollar cost average, so buy some with your paycheck and hold it and get a feel for it. And everybody I've taken down that journey, at first they do that. You're usually giving them that advice when the market's going up. Then they have the correction. They have to learn, oh my God, it can go down 40% as well. Am I going to lose all my money? They have to go through all of this. But that's the learning curve. And then after a while, they get used to the volatility and they become numb to it. And then you can say, okay, have you listened to podcasts? Have you done research? Have you been on Twitter? Not to listen to trading stuff, but just to understand what is this technology? Because Bitcoin is just a part of the space. It's the digital gold is the store of value. But then people they want to get more speculative in the space. They want to try and make money. So then you start saying, okay, listen, only use the top 3 or 4 projects.
Raoul Pal thinks that Bitcoin and cryptocurrency are only getting started following months of market hesitancy and volatile price activity. As he explains the reasons behind the impending macro-driven crypto boom, the CEO of Real Vision returns with a compelling update for investors. Today, we explore Raoul's most recent predictions about the future of cryptocurrency and why reducing inflation, more liquidity, and institutional acceptance will soon cause digital assets to soar. The banana zone, a time of accelerated expansion when prices disconnect from fundamentals and become parabolic, is quickly approaching. Raoul provides important charts, catalysts, and macro factors that may lead to the next big rush of money into Bitcoin, Ethereum, and the rest of the cryptocurrency market. He thinks that rather than merely seeing a recovery, we are on the verge of a historic bull run. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
You all have to go through that journey. The moron on the left, the first person in the space, is like buy Bitcoin and just hold it. Then you go through the whole justification of everything, and then you build this massive macro thesis that is entirely wrong, and then you're trading out of your coins, and then it's like, I'm going to make the money by trading the early stage stuff, and I'm going to do the AI tokens and this and blah blah blah. Yeah. And in the end you come to the other side, which is just buy and hold. There's too many coins, and it's a game of attention. So the more coins there are, the less attention can focus on the key ones, or it hyper-focuses on the big ones, or a narrative holds for a period of time, and it doesn't hold for long in this world. So if you look at what's happened in the last 3 years over the bull market, from the bottom of 2022 through to today, it's essentially been a Bitcoin dominance game. So just owning Bitcoin has been the best bet, except for 2 asset allocation shifts, basically, that have been relatively long-term for a year each. One was by Solana at the bottom, and the other was by Sui last year. And those have been the big bets. There's been interim bets where you've made a lot of money from some of these, but they've been less persistent. So they haven't captured attention for long. So some of them have lasted 6 months. But really what you're looking at is in the top 10, top 20 projects, what are the ones that have persistent network adoption that are growing and provable? Those are better quality bets. There's 2 ways that look at, so this is what we're talking about now is Metcalfe's law. That's how this price is actually priced. So Metcalfe's law is how to value networks. It's how Amazon was valued, Google was valued, all of these things. And what it is the number of active users and then the total value transacted. So i.e., are those users valuable? So the Bitcoin network has a lot of users. They don't do anything except buy and hold and trade a bit. But the value of that is a lot. We've got sovereign states buying. So there's big numbers. So that's why Bitcoin is worth more than everything else. Ethereum has a huge number of users and a massive number of applications. Now, the layer 2s have confused it somewhat, but that's why it has the value that it has. So what you're looking for is projects that are seeing growing user growth and growing applications that have value. And Solana, at the bottom of the cycle, it was being priced as if it was going to go to 0, yet you could see the developer community was actually growing and the number of users was stable. And then Bonk was like one of the things that kind of shifted the narrative a bit, and you started seeing user growth. So now you've got a big, proven, high-quality team, one of the best in the business, with great technology, and many other projects have great tech, but they got the adoption. And so that started to feel like it was a decent bet. Sui's the same thing.
How can I build wealth in crypto without any luck involved?
So simply, it's the same advice that everybody comes into the space. Just buy Bitcoin. And dollar cost average, so buy some with your paycheck and hold it and get a feel for it. And everybody I've taken down that journey, at first they do that. You're usually giving them that advice when the market's going up. Then they have the correction. They have to learn, oh my God, it can go down 40% as well. Am I going to lose all my money? They have to go through all of this. But that's the learning curve. And then after a while, they get used to the volatility and they become numb to it. And then you can say, okay, have you listened to podcasts? Have you done research? Have you been on Twitter? Not to listen to trading stuff, but just to understand what is this technology? Because Bitcoin is just a part of the space. It's the digital gold is the store of value. But then people they want to get more speculative in the space. They want to try and make money. So then you start saying, okay, listen, only use the top 3 or 4 projects.
Crypto is expanding more quickly than any other investable asset in history, according to Raoul Pal. He projects that there will be over 1 billion active cryptocurrency wallets globally by the end of 2025. Adoption is happening at an almost unfathomable rate, and with it comes one of the greatest chances to accumulate riches in history. This is the outcome of years of research, not just a gut feeling. Every graph and data point points to the same conclusion. Markets are driven mostly by liquidity, and cryptocurrency is expected to perform better than all other asset classes. For months, Raoul has been alerting investors about the impending perfect storm. Institutional interest, liquidity cycles, and macroeconomic movements are all at the same time. Crypto prices may experience a huge parabolic spike in the near future. To remain up to date on the most recent developments in Bitcoin, cryptocurrencies, and the digital economy, please take a moment to like this video, subscribe to the channel, and enable post notifications.
That's not the only risk. This space is so full of risks. You have to be paranoid at all moments. Because before you know it, you're like, well, I'm buying and holding, so I want to get some yield. And then you're on some DeFi protocol that's giving you yield and something goes wrong, goes to zero immediately. Okay, that is a classic one that happens endlessly. Or you expose your wallet and get hacked. And people don't understand wallet hygiene and how to keep things in different wallets and never expose your key wallets to things, always have a step in the middle, the custody side of stuff. There's so many ways you can get hacked. There's people impersonating me online or you online, trying to get your wallet, or impersonating Coinbase online. Everybody's after your money. And you have to be paranoid at all points. As I've talked to you before, take some lifestyle chips off. There's things I want to do with my life. And so I've not had any big capital expenditure for 5 years now. So I would like to be able to do something. And then, yes, I'll do an asset allocations shift, whether it's to, I'm not one to really go out of the market. Yes, a bit of cash, to have cash buffer, but I'm not one to go out of the market because I don't think the shape of the downside. My fear is that Bitcoin only goes down 40% this cycle and everybody sells out. So I'll probably allocate, whether it's towards Bitcoin or whatever, I'm not sure, but yeah.
A time frame? Do you have a price target?
Where you are in the cycle, you want to de-risk a bit earlier than you feel comfortable doing.
Yeah.
Because then the back end of the cycle can play out short or long, it doesn't matter. But you need to have enough wealth that you're feeling a little bit hubristic, like, oh, I king shit. That's when you take some money off. As soon as you start thinking, well, if I just double it again, I'm going to be really, just take some money off. We've not got there yet for me. So, another larger move in the cycle, I'll then take some money off and it'll feel too early and I'll hate doing it and I'll regret doing it. But I know it'll be the right thing. You're not going to time the top perfectly. And the thing is let's say you're buying a house with the proceeds. You've done well, you buy a house. Nobody can take it away from you, right? That's an asset that you don't have the fear of somebody stealing your wallet, getting your seed phrase. You don't have a fear of putting it in DeFi. The bricks and mortar are yours. You own it. You've got a house over your head. You've got an asset that's long-term. That is an incredible thing. And so people just need to do that. And that de-risks your whole life.
Is there a chance that crypto doesn't end up being a truly game-changing technology, and therefore that it never reaches the $50 or $100 trillion in value that you're forecasting?
So I had a conversation last night with one of the most famous VCs of all time, who's in crypto and was in fintech. He's still in fintech. And he was worried about this, is the talent density moving to AI. And I hadn't really thought that through, but he said, look, I don't see developer growth growing fast enough. But, one thing I do know is crypto has a superpower, behavioral incentives of tokens. And in AI, you might get a nice job. It's not clear whose equity is going to be worth anything, but tokens are fast to accrue value. And as the market starts pushing higher in the phase 2 of the banana zone, they'll come. So I'm not overly concerned by it.
Raoul Pal gives us a strong and sobering warning as we come to a close. Even if the cryptocurrency market has a lot of potential, there are still significant hazards involved. He warns us that you have to maintain your paranoia in this area. This entails exercising extreme caution when it comes to the platforms you utilize, the way you keep your cryptocurrency, and the security measures you take to safeguard your digital assets. Your holdings could be instantly lost if you make a mistake, such as using an unsecure DeFi platform or disclosing your private wallet credentials. He cautions that there are impersonators and scams everywhere. Even seasoned investors can fall for it. In order to obtain your money, people are always posing as well-known individuals or reputable businesses. It is crucial to maintain a buffer between your primary holdings and active use. Use numerous wallets and keep private keys offline as part of good wallet hygiene. Survival in a turbulent climate is more important than growth alone. Raoul, however, is not merely issuing a security warning. Additionally, he is providing a method for handling the emotional phases of a bull market. He claims that before it feels like the peak is the ideal time to de-risk or take some winnings. Your signal to remove some chips from the table is when you begin to think it may be awkward. You may get a sense of being left behind. However, safeguarding your wealth is equally as crucial as increasing it. He claims that a house is an asset that cannot be stolen, hacked, or lost by a fraudster or DeFi protocol. It keeps your wealth grounded in reality and lowers risk throughout your life. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content. And as always, happy investing.